All right, cool. So I just started recording. All right, so I'm going to take it again. When you draw your trend, the first reaction is what at the 38.20, which is representing a strong trend. All right. The second position is where between the 50.0 and the 61.8. That indicates a normal trend. All right, indicates a normal trend. And the last one is what the weak trend, which is between 78.6 and 88.6. That's where you have your weak trend. If you guys are getting this so far, drop 2 in the chat box. So you understand this so far, drop 2 in the chat box. All right, awesome. All right, cool. Now I'm going to draw an example of what I'm talking about before I show you live examples. All right. Now, let's see. This is the market, right? The market starts from somewhere, it shoots up, it comes back down, and it continues. What I think I'm going to do when I see a market like this, the first thing I always look out for is where is my EMA, okay? Whenever I see a market, whenever I look at a market, the first thing I look out for is where's my 200 EMA on the 3 minutes, right? On the 3 minutes, where's my 200 EMA? If my 200 EMA is below the candles, I know that it's what? An uptrend. If my 200 EMA is above the candles, then I know it's a downtrend, okay? So now, when we have a downtrend, definitely we're looking for sells because we love to trade with the trend. It's better that way. And then I see the market trending up. What am I looking for? I'm looking for buys. We always want to ride the trend, okay? So this style of trading basically is just waiting for a pullback. We always try to buy the pullback or sell the pullback, okay? Now I'm going to show you examples real quick. I'm going to show you examples of what I'm talking about. Now, let's go. All right, awesome. I like this. See this example now. I'm going to draw this horizontal line. Yeah, cool. Make that tick. All right, cool. Now let's say everything to the right part of the screen has not happened. All right, let's say everything to the right side of the screen has not happened. Okay. Let's say the market was let me see. Let's say the market is here. Okay. Let's say the market is somewhere here. Now, what do you think I'm going to do? Since it's a downtrend, I'm going to get my fibs on the 3 minutes, pick it up, get the high. This is the high. Remember, whenever you are trading, whenever you want to trade the sells for downtrends, you always draw your fibs from high points to low points. Okay? High points to low points. Now, let me open this. Let me make it bigger so you can see what I'm talking about. You draw it from high point to low point. So the market was up here. We drew our fibs, and the market was somewhere here now, right? And I know I've checked my currency strength. I know that USD is stronger than AUD. So I'm not looking to sell here. No, I'm never going to buy. Never. I'm always going to look for what? A reversal in the market so I could sell it down. But I'm not going to sell here because I know that the market always tries to correct a move. It always tries to give a pullback, right? So what am I going to do? Remember what I told you, 38.20 is what? A strong trend. If the market reacts at 38.20 and it pushes down and breaks this zero, then I know that this market is on a strong trend. But then if it pushes higher than 38.20, it is still below the EMA. So I know it's still on a downtrend. I'm going to check my currency strength to see how is AUD and USD doing. If I see that USD is still stronger than the AUD, what am I going to do? It's very simple. I'm going to box up my what? I'm going to box up my 50 to 61.8, which signifies a normal trend. Remember what I told you, the market will always come to the 50.61. It's like out of 10 moves that the market makes, at least 7 times you should see this happen, right? At least 7 times you should see this happen. So once it comes into this box, I'm going to start looking for entries. Now, how do I look for entries? I'm not just looking for entries because it's at the 50%. No, I'm looking for entries because it's at the 50%, and also I'm going to look for supports in the market. The last part where the market created a support. Now look, what is this? This is a support. You guys see that the market came, supported off this and shot up, came back, supported off this and shot up, right? So this support, once the market is below the support line, that support line becomes a resistance. That's basic trading. Everyone should know that, right? The market, once the market is below this line, you should know that that line is what? A resistance line. Now I'm looking for resistance. What's going to happen? The market comes into it, right? It comes into it, and what does it do? It pushes way past my what? Way past my resistance line. So I've taken my first entry at my resistance line. It pushes to the 61.8. That's where I'm going to take my second entry, and then I'm going to let this trade ride. What happens? Look at this is a 3 minutes candle. Remember, we take our trades for 2 minutes. So in this first candle, this is where we go in. 2 minutes, pop, probably one rollover, and then we clear. You see that? We clear this trade without any question. Look at that. 2 entries cleared. What does the market do again? It gives us the same entry. Remember what I tell you guys, sometimes when we're trading, I say, let's enter again, right? I'm like, guys, I like this trade. I still like it. AUD USD is still at our zone. If it comes back to this place, let's retake it. You guys hear me when I say that? And when it comes out, what do? We retake it, and most times we end up clearing because, first of all, EMA is giving us our confirmation that it's still on a downtrend. We have the market between our 50 and 61%, right? And thirdly, we have our currency strength on our side, telling us that USD is still stronger than AUD, right? So we still trade it until the market leaves us, all right? But some people get greedy. If I take this trade here with $100 and I clear 100, right? I put $200 risk and I clear it. If it comes back to that place, is it wise to take it with $100 again? No, I'm going to cut my risk by 2 and I'm going to take it with 50. Because at this point now, if I take it with 50 and it breaks this zone and keeps going up, I still have profits from the last trade I took. But some people are like, you know what, it came here again, I'm going to up my risk. Instead of going with 50, they decide to go with 150. And they lose the trade, they're like angry. And then a lot of things happen. Maybe because the market keeps going up, you start taking multiple entries, which you're not supposed to do. All right. So whenever you win a trade, if you're retaking that position again, drop down your risk by half. Okay. If you do that, it's going to save you a lot, because even if I drop my risk by half, if I win that trade, it's still going to increase my profits, right? It's going to increase my profit. So you need to think that way. Don't think like someone that is greedy. Don't think about, if I don't make this money now, I can't make it again. Nah, don't do that. All right. If you do that, you're not going to go far. All right. So what do? You trade, it pushes to the downside. What does the market do again? It breaks my zero. So now I know that it has gone lower. What am I going to do? If I'm still trading AU, I'm going to come to the last place it created this high, and I'm going to draw again. From this, I always draw from my week. So this, where is it? Yep, I draw to this one. I just want to show you guys an example. I'm going to clean this up once, right? Right. So this was the 50% reacted before it broke the zero. So I'll draw from the new 50 to the downside. What does the market do? Look at this. It comes to my 38.2 and pushes lower. So now I know, oh, this is a strong trend. All right, this is a strong trend. Most times from your currency strength, you're going to know it's a strong trend, because I mean, if I'm trading and I see that AUD is having 1 bar, USD is having like 5 bars, right? Like 5 bars, and I see this first reaction here, that it comes to this 38.2, it drops. It comes again, it drops. I know automatically that this 38.2 is a strong zone that the market doesn't want to break, and I'm going to sell with a lower risk, obviously, right? Because I feel more comfortable trading between the 61.8 and 50.0 zone. So I'm going to use a lower risk here, clear, right? And then what's going to happen? I'm going to add this to the lowest point. This is the lowest point here. What does the market do again? It comes back to 38.20. What does it do? It drops down again. But this time it does not break this zero. It doesn't break this zero. So I know, okay, this market is up to something right now. Right? I know this market is up to something right now. So what am I going to do? I'm going to draw, increase it, and see what it does. Now look at what the market does. At this point, look, this is the 50%. There was the last resistance here. I'm going to look at my, what's it called? I'm going to look at my strength meter to know if I'm going to enter this trade or not. Because remember, the market will always move from a low point to a high point. So because a market was on a downtrend before, obviously it can switch and go to and become an uptrend market. You guys know that. So you need to be careful to know when the market is ready to switch, right? And your currency strength will always tell you. But the thing is that the currency strength that most of us use, which is this live code something something, right? This live chart, it doesn't do justice. So the one I use, I download what's it called? Currency heat wave, right? Currency heat wave is the name of the currency strength I use, and it's about 12,000 naira. You pay for it on App Store or Google Play Store, all right? And it gives me the accurate, as the strengths are changing, I can see it on my phone. So I know most times, even when I say, USD is losing strength, so let's not enter this trade. Even if it's pushing to my 50%, I'm like, let's not take it, because I'm seeing it on my strength meter. But this one will not tell you that. This one, it's kind of this very slow, right? So you guys should try and look into that. You know, if you want to make money in trading, you have to invest also. Now, what does it do? Even at this, remember what I told you, we trade 38% for strong trends. We trade between the 50 to what? 61% for what? What's it called? For normal trends. And then we trade weak trends at what? 78 to 88.0. So now the market came to 50%, 61%. I traded and I lost it, right? I traded this and I lost it. Look at that. But then I'm still looking at my strength meter. It's telling me that US dollar is still stronger than AUD. I'm like, this doesn't make any sense. What am I going to do? I'm going to look. It's still below the EMA, right? It's still below the EMA. So I'm going to be like, okay, cool. If it's still below the EMA, let me look for more entries at the top zone. So it pushes, and what does it do? It comes to hit 78.6. That is my first entry. Once it gets to 78.6, I take my first entry. If it pushes to 88.6, that's my second entry. Look at these guys. I cleared one, it went down back to 50%, pushes back up, came back to what? 78.6. I'm going to take a second entry, clear. But remember, at this zone, I'm trading light risk because this represents a weak trend. So it means the market can flip on you anytime. So you don't want to go in with your normal full 3% or 2%. You want to trade with a lower risk, all right? I traded, boom, cleared one, cleared two, and then it pushes what? Comes back here, I take my first entry, it pushes higher, I take my second entry. And then what does the market do? The market melts, right? It melts. I have a rollover rule of 2 times. If I roll over 2 times and the market doesn't do what I want it to do, I let it go, right? It's better to let a trade go and look for a better entry than to keep rolling over. Because at the end of the day, when you keep rolling over, you might come into profit, and maybe at the expiration of your trade, the market does this to you. It goes out of profit again. And you're like, why didn't I just take a new entry? I would have cleared this trade since. So in order to not regret all those things, it's better to have a rollover rule, have an entry rule, have an exit rule, and that's it, right? So this is just an example of how it happens. And what does AUD USD do? It dies. Look at that. After all of this noise, it dies completely to the downside. So imagine you coming back to the chart after 20 minutes to see all of this happen. You'll be angry that, oh my God, I can't believe. So this market later went down, right? Yes, it's always going to go down, but you need to know how to take entries. This is not Forex. This is HFX. It's very time sensitive, right? So you need to be able to pick all those entries, know when to enter, all right? Now, this is an example of a downtrend. Let's now go to an example of uptrend. Beautiful. I can see another one right here. This is an uptrend. Cool. What am I going to do? For uptrends, we draw what? Low to high, okay? For uptrends, we're always going to draw low points to what? High points. I always do that, low point to high points. Now, this is where the market took off before it went to the uptrend side. This is my EMA. What's my EMA telling me? That the market is what? The market is above the EMA, so I'm looking for buys. Cool. The market pushes, hits my zero, comes back down. Now it's around my 38.20. What am I looking at? It breaks 38.20. Once it breaks 38.20, most times I look at what is to the left, right? And what do I see? I see this. I see this. This is the last place. Look at the market came here, did all of this, and it went up. So I can see a clear support here, right? I can see a clear support. The market came here, supported before it shot to the upside. So definitely the market is either going to react here or it's going to react where? Here. You guys see that? So now what am I going to do? This is my first entry. If it pushes lower, that's my second entry. It's that simple. Put in mind that you're going to take 2 entries in this trade. So if probably you have $50 you want to go into with the trade, with the split it 25-25, you enter here, you enter here. It's that simple. All right. Not that you decide to over leverage. No, you split your risk and you take the 2 trades. And what does the market do? It reacts exactly at 50. It goes back. It comes again, reacts, goes. So you're able to clear 2 trades of this information. And what does it do? The market shoots and breaks. Now it has broken my 0. What am I going to do? I'm going to draw a new, what? I'm going to draw a new trend. Go to the 50% where it reacted earlier and draw to what? The 100, and draw to the top. And now let's see what the market did. This thing is like magic, all right? The market will always come there. What can I see? This is my 50 and this is my 61%, right? What am I going to do? The market reacted earlier. Yeah. You guys see that? Draw it. Look, the market reacted here. It came, did it, then it shot to the upside. So I'm expecting a reaction either here or what? Yeah. All right. And remember, guys, pay attention to the EMA. Sometimes the market will always pull, the EMA will pull the market to itself so you can shoot it back up. You saw what it did here. It pulled the market down, shot it up, pulled it again, shot it up. Did the same thing here, shut it up. So always pay attention to the EMA. All right. Always pay attention to the EMA. It's very important. If your market is here and the EMA is somewhere, put in mind that this EMA might attract the market. Sometimes it can even be a week. You just want very fast we come to the EMA and shoot back. All right. So always pay attention to all those things. Like, look, when the market closed, what was the market trying to do? Look at this week. So it's coming close to the EMA, right? Before it shoots back up, but the market closed. So what happened here? Based on 50%, remember, I didn't just take the trade just because it was 50%. I took the trade because I see a clear support here. It comes, boom, I clear. It comes again to my box, I clear. Comes, tap my box, I clear 3. And boom, what does the market do here? It breaks. So I have one entry here. And I'm not just because the market is going lower, I'm taking entries. No, I'm waiting because I know that there's another support here. So I'm not just going to take trades in between these 2 lines. I'm going to take a trade when it gets to my second box. From my yellow line to my second box, I'm looking to take entries. And what happened? I take my second entry. So I lost what? Because I'm sure this is like how many candles? 1, 2, 3, 4. That's about 4 and 3. That's about 12 minutes. And we take 2 minutes trade. So if you roll it over, it's 4. With one more rollover, that's like 5 minutes. So definitely you don't have enough time. So you're going to what? Lose this one and win this one. So you won 1, 2, 3, lost this and won this. So you went 4-1. That's not a bad trade. I mean, you went 4-1, right? And then you continue trading, right? So this is an example of an uptrend, right? So it's actually not hard. The more you draw, the more you start drawing these things, the more you start seeing them. Just keep drawing. You can draw it on the 1 minute, you can draw it on the 5 minutes, depending. But always pay attention to your EMA, all right? Your EMA will tell you if the market is on an uptrend, downtrend, then your currency strength meter also pay attention to that. Because your currency strength meter tells you if this market is going to push lower or not, if it's going to go higher or not before it reacts, all right? So actually, you don't need a lot of indicators if you're trading with the fibs. You don't need a lot of indicators. You just need to know the trend of the market, find your support, resistance, find where the market is falling from. That's the top, and you find the bottom where. I mean, and it's that simple. Let's take one more example. Like, look at this. Look at this. You see how the market fell from here to here. You guys see how this market fell? None of this, if I'm trading, I'm not going to let this waste. I'm definitely going to get entries on this. But how am I going to get entries on this? Let's start. Let's start from here. Look at this. Boom, high points, low points. This is the low point I'm using right here because none of this has happened. Okay, let me put this line. None of this has happened. Okay, so this is where the market was. I was like, oh, this is my high, this is my low. USD is stronger than AUD, so I'm looking for sales, but I can't take my sales yet until it comes here. Remember what I told you? Boom. Why did I draw that line? Look what happened here. We have a lot of weak rejections here, meaning this is a support. Pop went to the upside, broke it. When it breaks it, whenever a support is broken, it becomes a resistance. We all know that. It breaks, boom, it comes back. Immediately it hits. The good thing about fibs is that it gives you the price. Remember, we're looking at the last three numbers. This is 356. It gives you the price. Once on your binary sense, IQ sense, race option, Vibe Forex, what's the last one? Basically, you're trading this thing, your trading platform. Once you get to 356, you sell it. And what happened? Boom, you sell to the downside. What does it do? It breaks. It breaks my zero. I'm like, oh shit, this thing just broke my zero. All right, cool. Let's draw something new. All right. Let's draw something new from this. I draw to the downside. This is how low it went before it started coming up a little. All right, let me turn this off. Right, cool. Oh no, not that one, wrong. Yeah, this, turn it off. Now, cool, what does it do? Now, how do I know is a strong trend? Remember, I told you probably AUD was 1 bar, USD was like 4-5 bars. What does it do? It reacts around the what? It reacts around the what? 38.20. I'm sure if I go to the 1 minute, the 1 minute EMA was somewhere here. All right. I also use 1 minute EMA to get entries in the market, but that's like more advanced. You can just decide to use your 3 minutes EMA. And what happened? We traded up the 38.20 with lower risk. You see that? Pop, it broke the zero again. Now it's breaking the zero. What am I going to do? Turn this off. I'm going to draw again. Remember, I've gotten 2 entries right now from the drop. What does the market do? Look at this. Pop right here. This is sweet. Look at this. High to low for sales. Remember, what does the market do? Pop, pushes. Clear 1, clear 2, even went as high as this. Clear 3, clear 4, pop, clear 5, clear 6. Let's draw. Let's move it a little. So I just clicked 6 times, and before the market broke to the downside. And what does it do? It picks up again and comes, and it blessed me 1, 2, 3. So I cleared 6 plus 3, 9. Just off this particular setup, I cleared 9 times. So remember, our first entry, we cleared it with our normal percentage, right? The remaining 8 entries, we cleared them with half of the risk we used on the first one. So we made money still. We made crazy amount of money still from this particular setup. And what happened? It now later dies. All right, dies to the downside. Now it died. What am I going to do again? I'm not going to let this waste. This is my last 50%, right? I'm going to draw from there because this is not about to leave me. I'm about to make money off this. Nope, you can't leave me. I draw it down here. What does the market do? It comes down, boom, and then what does it do? It reacts at 38.2. Remember, always look at your currency strength to know if you're going to take it at this point. But me personally, because of this candle, right, because of this bearish candle to the downside, I would have wanted to take my entry around, around this line to the green line. That's where I'll be targeting because this is a very strong bearish candle. All right, a lot of volume went into this, so I like that. But what happens? Boom, it keeps pushing, and I would have missed that entry, and that's fine. Now look what happened. See this move to the upside. AUD gained a lot of strength at this point to make this particular move. And if you're using currency heat wave, you would have seen this, right? But then even if I see that, what do you think I'm going to do? is at this level. I'm going to come back to my high. Look at my high right here. I'm going to come back to my high, draw it to my low. You're going to see that we're still going to catch this move, no matter what. And what does it do? Comes here, boom. Ta-da. That is where I'm going to trade it off. Green line, I'm not just going to jump into the green line because what do I see? Reaction, reaction, reaction. So where is it here? First entry, second entry. Do you guys see that? First entry, second entry, cleared one, lost one, depending on the rollover, right? And what does the market do? It breaks down, that's dropped below the 50, comes back to retest the 50, another entry before it drops to the downside. So I was able to catch 2 wins, 1 loss. And what does the market do? It now does this. Now let's clean this up. How do you handle something like this? Well, let me go back. Sorry. Yeah, come on. All I'm going to do is simply just push, all right? The market is still around the same zone, so I'm just going to increase my line. The market didn't break any zone. It didn't break any high. It didn't break any low. It was just staying there. My EMA is still telling me the market is down. So what happened? Sell here, clear. Nothing here because I don't like all these chopping movements. I'm waiting for it to either hit high or this line. Cleared here, cleared here, pushes high. I'm going to take this entry still, but probably it's going to be a loss depending on where you took your entry. And then it pushes high, cleared, cleared, and then what happens? Depending on if, remember, you keep taking it until it leaves you, all right? Keep taking it until it leaves you, and then what does it do? It leaves, drops, but we're done with it. Most times we enter a section to just take 3-4 trades, right? And we're done. So, I mean, this is actually a lot of entries. And you're not just analyzing AUD, USD. There are other currency trades, other currency pairs that you're analyzing. And you're trading off those, all right? You're trading off those. So, the more you train your eyes, the more you're going to see them, right? The more you train your eyes, the more you're going to see them. Most times when I'm trading with you guys, on the what's it called, on the section, that's when you see me marking out all these zones to wait for the market. So the more you do, the more you start seeing it, right? You could just decide to dedicate 1 hour a day, draw your fibs, see what's happening, draw your fibs, see what's happening. The market is going to open today by 5, maybe like 14 minutes, market is going to open. You draw your fibs and watch what is going to happen in the market. Just, run a demo course on it for like a week and see what's happening. Maybe you could even do it for a month before you start using your real money to see how far, right? To see how far. So yeah, I still have some levels on this, and let me see how this played out. Let's see, right? This was EU of, when was this? What day? This was 4th of November, right? 4th of November, this was when I drew this. So let's see what happened. This was the high, this was the low. What did the market do? The market came to what? 50%, 60%, and reacted. Now, let me show you how many entries we're able to get on this trade. 1, 2, 3, 4, 5, 6. Before it later dropped. We're able to take 6 trades of this particular currency, and we cleared them all, right? Just by drawing. And remember, whenever you draw your fibs, you have to be patient. You see us sometimes we draw fibs on the section and the market leaves us. It's fine, it happens. The market, most times the market will leave you, but it's better to wait for the market to come to your entry than for you to rush it, because I'll tell you this, there are times when I rush the market to get entries and then the market ends up pushing to where I wanted it to go. But then, because that's gone to where I wanted it to go, I've taken an entry earlier, I can't take a new entry because probably I've used my 2 entries already. So I'm just looking at it and I'm angry at myself. But then what can you do? So most times it's better you wait, okay? Whenever you drop a zone, wait for the market to get to that zone before you go in. It's very important to wait. All right. So do you guys have any questions? If you have any questions, put it in the chat box so I can answer, and then we can end this section because the market opens today. So definitely you guys have to, go into the market and see what's up.
Guys, if you have questions, please ask your questions now. Thank you very much, Coach Abba. Thank you for doing this. Please, if you have questions, just drop your questions so he will attend to you. Anything that is worrying you, even if it's not here, like anything in trading at all, please kindly ask your questions.
All right, I think I should open a call. So if they want to unmute themselves, they can. All right, cool. If you want, if you have questions, you can unmute yourself or you can type it in the chat, whichever.
Okay, I have a question, please.
Okay.
Yeah. Thanks. I always love the way you handle things. It makes it look very simple and nice. Thank you very much, Coach Abba. So my question is, so if on using the fib for the trading, and when it's getting to your point of trading and you notice that there's a flip of the strength of the currency, so what are you expected to do? Like, for example, you expect to buy, for example, and when it's getting to that line, there's a flip of currency. What is one expected to do at that point?
Okay,
so maybe or something.
Okay, so what I do whenever there's like a flip in the strength of the currencies, I wait, right? If I mark a zone and I see the market gets into the zone, if there's a flip in currency, the market tends to move faster to that zone than how it normally like struggles to get there. You know, when you are trading, you always want to look for exhaustion in candles. Like if something is going to sell, the way it keeps lingering around that zone for some time before it drops.
Okay.
So you always try to watch out for exhaustion in candles and strength in the particular candle, because most times if there's a flip in currency strength, you see a candle just from nowhere shoot right up. So when you see something shoot right up like that, you don't just enter because it's going up. You try to understand why this is happening and if this could continue going up or if it could continue going down. But if the strength flip is not that much, right? It could be that maybe this that particular currency is trying to hit the EMA, because you know the EMA will always attract the market to it. So you also watch out if the EMA is close to your market and that happens, just know that it's happening because the EMA is there. The EMA is trying to pull the market to it so it could shoot it the opposite direction. So you're going to wait. Once the market hits the EMA, that's when you take your entries.
Thanks for that. Thank you very much.
All right. All right. So do we have any other question? All right, part of trading with the refined fibs also, which other currency stream that is faster than the one we use. All right, for where you find the fibs, top left corner of the trading view, you're going to see 1, 2, 3. The fourth one, you're going to click on it and you're going to see fib retracement. Start, okay? When you start, it means you're fib writing it and it pops down either up or down. Either it's going to pop on your screen though, so it makes it easier instead of you always coming to this part to check. You could just simply do it from here. All right. And for strength meters, I always use what's it called? Currency heat wave. Right. I use currency heat wave because it's you pay for it obviously, but it's gonna give you the accurate strength of the particular currency. All right, this is how it looks like. So you can always download this and it gives you everything. As the currencies are flipping, you're going to see it live. So you're not going to rush into a trade because you're like, this thing is going to leave me or not. No, you're going to see it from the currency strength. Okay. This is losing strength. This is gaining strength. So I'm going to wait or I'm going to go in now. All of that. And also when you want to roll over, you're more confident when you know that the strength hasn't changed, right? You're more confident. So yeah. Let's see any other questions. All right, cool. So I guess that's the last question. So I'm going to see you guys tomorrow, right? So we're going to be trading tomorrow, same time. It seems like the number of people that comes to trade by 2 a.m. I think you guys like sleep, but that's when we make a lot of money. So try and sleep early, all right? So you can wake up by 2 and make money with us. Because I think last week we had, I think like only 2 losses throughout last week. So last week was a good week, and I heard it was NFP week. But NFP had nothing on us. So definitely this week is gonna be a good week also. So I see you guys on the
Thank
chat.
you. Thank you
All right.
very much, Coach Abba. Thank you, everybody, for tuning in.